welcome to our channel. Today, we're diving into the 15 secrets of the wealthy that can help you unlock financial success. Now, I know what you're thinking. Secrets? Is this some kind of get-rich-quick scheme? Absolutely not. These aren't shortcuts or magic formulas. These are time-tested strategies and principles that have helped countless people build wealth over time. Listen, becoming wealthy isn't about luck or being born into money. It's about making smart choices, developing good habits, and understanding how money works. And that's exactly what we're going to cover in this video. Over the next few minutes, I'm going to break down each of these 15 secrets, giving you actionable steps that you can start implementing in your own life today. So, if you're ready to take control of your finances and start building a brighter financial future, grab a notebook, get comfortable, and let's dive in. Now let's talk about how the wealthy actually grow their money, and that's through investing. And no, I'm not talking about gambling on meme stocks. I'm talking about building a diversified portfolio that generates passive income and appreciates in value over time. One of the most common investment vehicles for the wealthy is the stock market. And within the stock market, you've got options like individual stocks, which can be risky but offer high potential rewards if you know what you're doing. But remember, picking individual stocks can be like trying to time the market, and even the pros get it wrong sometimes. That's why many wealthy investors also turn to mutual funds and index funds. These are baskets of stocks that offer instant diversification, spreading your risk across various sectors and companies. It's like investing in the entire market all at once, and it's a strategy that's been proven to build wealth over the long term. But it doesn't stop there. The wealthy understand that diversification is key, so they don't put all their eggs in one basket. They invest in real estate, bonds, precious metals, and even alternative assets like art or collectibles. The key takeaway here is that investing is not a one-size-fits-all approach. It's about finding the right mix of assets that align with your risk tolerance, financial goals, and time horizon. Listen, you can't build a skyscraper without a solid foundation, and the same goes for your finances. Before you even think about investing, you need to master the art of saving. Now, saving might sound boring, but trust me, it's the essential ingredient that separates those who dream of wealth from those who actually achieve it. So, how do the wealthy make saving look so effortless? Well, it all starts with automation. They automate their savings just like they automate their bills. Set up a system where a portion of every paycheck gets automatically transferred to your savings account before you even have a chance to spend it. Next up, cut down on unnecessary expenses. Look, I'm not saying you need to live like a monk and deprive yourself of everything, but take a hard look at your spending habits and identify areas where you can cut back without sacrificing your happiness. Do you really need that daily latte or that expensive cable package? Remember, every dollar you save is a dollar that can be invested and put to work for you, earning you even more money over time. So, get into the habit of saving consistently, even if it's just a small amount at first. Trust me, those small amounts add up over time, creating a solid foundation for your financial future. You know, when you're building a house, you don't just wing it, right? You hire architects, contractors, and specialists who know what they're doing. Well, the same principle applies to managing your wealth. The wealthy understand that their time and energy are valuable, so they delegate tasks that are outside their area of expertise to professionals. That's where financial advisors come in. A good financial advisor is like a personal trainer for your money. They help you create a customized financial plan, manage your investments, optimize your taxes, and navigate complex financial decisions. Now, I know what you're thinking. Financial advisors are expensive, and yes, they can be. But here's the thing. A good financial advisor can actually save you more money than they cost by helping you avoid costly mistakes, maximize your returns, and make informed financial decisions. They also provide valuable peace of mind, knowing that your finances are in capable hands. The key is to find a reputable and trustworthy financial advisor who understands your goals and has your best interests at heart. Look for someone with experience, certifications, and a track record of success. Remember, wealth management is an ongoing process, not a one-time event. Having a trusted advisor by your side can make all the difference in achieving your long-term financial goals. Chapter 4. Financial Planning. Mapping out your route to success. Imagine setting off on a cross-country road trip without a map or GPS. You'd probably end up lost, frustrated, and nowhere near your destination, right? Well, the same goes for your financial journey. Without a clear financial plan, you're just drifting aimlessly, hoping for the best, but not really in control of your financial future. Financial planning is like creating a roadmap for your money. It involves setting clear financial goals, determining your current financial situation, and developing a step-by-step plan to achieve those goals. It's about making conscious choices today that will set you up for financial success tomorrow. Start by defining your short-term and long-term financial goals. Do you want to buy a house, retire early, travel the world? Whatever your aspirations, write them down and attach specific financial targets to them. Next, assess your current financial situation. Track your income, expenses, assets, and debts. This will give you a clear picture of where you stand financially and help you identify areas for improvement. Once you have a good grasp of your financial situation, you can start developing your plan. Chapter 5. Diversification. Don't put all your eggs in one basket. You've probably heard the saying, don't put all your eggs in one basket. Well, nowhere is this more true than in the world of investing. Diversification is the key to mitigating risk and maximizing returns over the long term. Think about it this way: if all your money is invested in a single stock and that stock plummets, you're in big trouble. But if your portfolio is spread across various asset classes like stocks, bonds, real estate, and commodities, a downturn in one area won't completely wipe out your savings. The wealthy understand that diversification is not about avoiding risk altogether, it's about spreading that risk intelligently. They diversify across different asset classes, industries, and geographical regions. One popular approach is the asset allocation strategy, where you allocate a certain percentage of your portfolio to different asset classes based on your risk tolerance, time horizon, and financial goals. For example, a younger investor with a longer time horizon might allocate a larger portion to stocks, which have historically delivered higher returns over time. Remember, diversification is not a set-it-and-forget-it strategy. It requires regular review and adjustments as market conditions change and your financial situation evolves. Chapter 6. Passive income: making money while you sleep. Imagine waking up every morning to find money flowing into your bank account, even without lifting a finger. Sounds pretty amazing, right? Well, that's the power of passive income. The wealthy understand that true financial freedom isn't about trading time for money. It's about creating multiple streams of income that work for them 24/7, even while they sleep. Passive income is all about generating money from assets that require minimal effort to maintain. One popular form of passive income is rental income. Owning rental properties can provide a steady stream of cash flow, especially as property values appreciate over time. But real estate isn't the only option. The digital age has opened up a world of opportunities for generating passive income online. You can create and sell online courses, write and sell ebooks, build and monetize a blog or YouTube channel, or even invest in dividend-paying stocks. The key to building passive income is to identify your strengths and passions and find ways to monetize them. It takes effort up front to create these income streams, but once they're up and running, they can generate income with minimal ongoing effort, giving you more time and freedom to pursue your passions. Chapter 7. Budgeting: the master key to financial control. Okay, let's face it, budgeting isn't exactly the most glamorous topic. In fact, it's something many people try to avoid like the plague. But here's the thing. Budgeting is not about deprivation, it's about empowerment. It's about taking control of your finances instead of letting them control you. The wealthy understand that a budget is not a constraint, it's a roadmap to financial freedom. It's about making conscious choices about where you want your money to go, so you can achieve your financial goals faster. The first step to creating a budget is to track your spending. Use a budgeting app, a spreadsheet, or even just a good old-fashioned notebook to track every dollar that comes in and goes out for at least a month. Once you have a clear picture of your spending habits, you can start identifying areas where you can cut back and save more. Look for subscriptions you don't use, unnecessary expenses, or areas where you can negotiate better rates. Then allocate your income towards your essential expenses, savings goals, and discretionary spending. Remember, budgeting is an ongoing process, not a one-time event. It's important to review and adjust your budget regularly as your income, expenses, and financial goals change over time. Chapter 8. Tax optimization: keeping more of your hard-earned money. Let's be honest, nobody likes paying taxes. But the reality is taxes are a necessary part of life. However, that doesn't mean you have to overpay. The wealthy understand that tax optimization is not about evading taxes. It's about legally minimizing your tax liability by taking advantage of all the deductions, credits, and loopholes available to you. One of the most effective ways to reduce your tax burden is to maximize your retirement contributions. Contributions to 401ks and IRAs are typically tax deductible, which means you can reduce your taxable income and lower your tax bill. Another strategy is to take advantage of tax-advantaged investment accounts like Roth IRAs. While contributions to Roth IRAs are not tax deductible, qualified withdrawals in retirement are completely tax-free. This can be a huge advantage, especially if you anticipate being in a higher tax bracket in retirement. The wealthy also understand the importance of working with qualified tax professionals. CPAs and tax attorneys can help you navigate complex tax laws, identify potential deductions and credits, and ensure you're paying the least amount of taxes legally possible. Chapter 9. Real Estate Investment: Building Wealth Brick by Brick. Real estate has long been a cornerstone of wealth building, and for good reason. It's a tangible asset that offers the potential for appreciation, cash flow, and tax advantages. The wealthy understand that real estate is not just a place to live, it's a powerful wealth-building tool. One of the most attractive features of real estate is its potential for appreciation. Over the long term, real estate values tend to increase, especially in desirable locations. This means your initial investment can grow significantly over time, building equity and wealth. But real estate isn't just about appreciation. Rental properties can generate a steady stream of passive income, providing cash flow that can be reinvested or used to cover expenses. And let's not forget about the tax advantages. Real estate investors can deduct expenses like mortgage interest, property taxes, and depreciation, which can significantly reduce their tax liability. Of course, real estate investing isn't without its risks. Property values can fluctuate, tenants can be unpredictable, and managing properties can be time-consuming. But for those willing to put in the effort, real estate can be a lucrative and rewarding investment that can help you build generational wealth. Chapter 10. Retirement Planning: Securing Your Golden Years. Retirement might seem like a lifetime away, but the truth is, it's never too early to start planning for your golden years. The wealthy understand that retirement planning is not just about saving money. It's about creating a lifestyle that allows you to enjoy the fruits of your labor without financial worries. One of the most important aspects of retirement planning is starting early. The power of compounding means that the earlier you start saving, the more time your money has to grow exponentially. Even small contributions made consistently over time can add up to a significant nest egg by the time you retire. But retirement planning is not just about saving money, it's also about managing your expenses and planning for healthcare costs. As you age, healthcare expenses tend to increase, so it's crucial to factor these costs into your retirement budget. The wealthy often utilize strategies like long-term care insurance and health savings accounts, or HSAs, to mitigate the financial burden of healthcare in retirement. Another important aspect of retirement planning is diversifying your income streams. Relying solely on Social Security or a traditional pension plan may not be enough to maintain your desired lifestyle in retirement. The wealthy often create multiple streams of retirement income, such as rental income, dividend-paying stocks, or even part-time businesses, to supplement their traditional retirement savings. Chapter 11. Emergency Fund: Your Financial Safety Net. Life is full of surprises, and not all of them are pleasant. Unexpected events like job loss, medical emergencies, or car repairs can wreak havoc on your finances if you're not prepared. That's where an emergency fund comes in. Think of an emergency fund as your financial safety net. It's a stash of cash set aside specifically to cover unexpected expenses, so you don't have to dip into your savings or go into debt when life throws you a curveball. The wealthy understand that an emergency fund is not a luxury, it's a necessity. They prioritize building a robust emergency fund that can cover 3 to 6 months' worth of living expenses. This provides a financial cushion to weather unexpected storms without derailing their financial goals. But how do you build an emergency fund, especially if you're living paycheck to paycheck? The key is to start small and be consistent. Even if you can only afford to save $50 or $100 a month, every little bit helps. Automate your savings by setting up a recurring transfer from your checking account to your emergency fund each month. You can also look for ways to boost your emergency fund savings, such as selling unused items, picking up a side hustle, or negotiating lower bills. Chapter 12. Debt Management. Using debt strategically. Debt often carries a negative connotation, and for good reason. High-interest debt can quickly spiral out of control, trapping you in a cycle of endless payments. But here's the thing, not all debt is created equal. The wealthy understand the difference between good debt and bad debt, and they use debt strategically to build wealth. Good debt is debt that is used to invest in assets that have the potential to appreciate in value or generate income. This includes things like mortgages, student loans for degrees that lead to high-paying jobs, or business loans. Bad debt, on the other hand, is debt that is used to finance consumption or depreciating assets. This includes things like credit card debt, car loans, or payday loans. The wealthy prioritize paying down bad debt as quickly as possible, as the high interest rates associated with these types of debt can quickly erode wealth. They often utilize strategies like debt snowball or debt avalanche methods to accelerate their debt payoff. But remember, even good debt should be managed responsibly. The wealthy are careful not to over-leverage themselves, meaning they don't take on more debt than they can comfortably afford to repay. They maintain a healthy debt-to-income ratio, which is a measure of how much of their income is going towards debt payments. Chapter 13. They say your network is your net worth, and nowhere is this truer than in the world of finance. The wealthy understand that building strong relationships with other successful individuals can open doors to opportunities, provide valuable insights, and accelerate their financial success. Networking is not just about attending fancy events and collecting business cards, it's about building genuine connections with people who share similar goals and values. It's about providing value to others and being willing to help others succeed. One of the best ways to network effectively is to join industry events, conferences, and workshops. These events provide a platform to connect with other professionals in your field, exchange ideas, and learn from experts. But networking isn't limited to in-person events. The digital age has made it easier than ever to connect with people online through platforms like LinkedIn, Twitter, and industry-specific forums. Remember, networking is a two-way street. It's not just about what others can do for you, it's about what you can do for others. Be willing to offer your expertise, share your resources, and connect people in your network who might benefit from knowing each other. Chapter 14. In the fast-paced world of finance, knowledge is power. The wealthy understand that continuous learning is not optional. It's essential for staying ahead of the curve, adapting to changing market conditions, and making informed financial decisions. They view education as an investment, not an expense, and they're constantly seeking to expand their knowledge and skills. One of the best ways to commit to continuous learning is to become a voracious reader. Read books, blogs, and articles by financial experts, successful investors, and thought leaders in your field. Stay informed about market trends, emerging technologies, and economic indicators that could impact your investments. But learning isn't just about consuming information, it's also about applying that knowledge in real-world scenarios. The wealthy aren't afraid to experiment with new investment strategies, test different business models, or take calculated risks to grow their wealth. Remember, learning is an ongoing journey, not a destination. The more you learn, the more you realize how much you don't know. Embrace a growth mindset and be open to new ideas, perspectives, and ways of doing things. Chapter 15. Here's the thing about building wealth. It's not just about what you know, it's about who you are. The wealthy don't just stumble into financial success. They cultivate a specific mindset and habits that set them up for success. One of the most important traits of successful individuals is discipline. They're able to delay gratification, resist impulsive spending, and stick to their financial plans, even when it's not easy. They understand that building wealth is a marathon, not a sprint, and it requires patience, persistence, and a willingness to play the long game. Another crucial aspect of the wealthy mindset is a positive attitude and an unwavering belief in their ability to achieve their goals. They don't let setbacks or failures define them, they view them as learning opportunities and stepping stones on the path to success. They surround themselves with positive influences, mentors, and like-minded individuals who support their goals and inspire them to reach their full potential. Remember, your mindset is a powerful tool. It can either hold you back or propel you forward. Choose to cultivate a wealthy mindset by focusing on abundance, embracing challenges, and believing in your ability to create the financial future you desire. Thanks for watching. If you found these secrets helpful, please like, share, and subscribe to our channel for more insightful content. Remember, building wealth is not a pipe dream. It's a journey that anyone can embark on with the right knowledge, strategies, and mindset. Start implementing these secrets into your own life today, and watch as you begin to unlock your full financial potential. See you in the next video.